following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday at 11 o'clock till noon Eastern Time. Hey, what a day, huh? I did do Larry's show, Larry Pesavento, the 9 o'clock show. So I was able to do quite a number of things, especially since the market hadn't opened. And I was able to go through some of the, in a very quiet way, I was able to go through a number of other commodities, etc. I have to tell you, this is just a spectacular move that we've seen in gold. The GLD is up 278 at 118.44, and the dollar took a plunge. Let me just do this because I always forget it's Technical Friday. Let me just show you. Yesterday, when we were looking at the chart, we were right at 11. I think it must have been because I'd forgotten, then I did remember. So we were looking at it round about here. I think it was 11:30. And we had pulled back, and I said that the 9-period exponential moving average must hold. No, that's right. I'd sent it to the Dan, and then I'd said that the 9-period moving average should hold. And there's a good chance that we will go, if we break above 2095.25. No, I'm sorry, we were right here. If we broke above 2093.50, the high at 20 to 11 Eastern Time yesterday, there's a real good chance that we could have a Chapman wave inside wedge target line, left side, right side price match to the 10 to 7 high on the 2nd of 2097.25 in the E-mini, the ESM contract. And I drew this in, and lo and behold, at exactly 110, spike, boom, goes right to 2097.75 peak E, pulls back, makes a little bit of a turn, and then starts a brand new move, and it goes alternate count. It turns out to be an A, B, C, D, E, F. F goes all the way to 10 minutes to 5, and that is at 21:04.75. Then it chugs around, and has a sudden spike. I think it was in the evening. Yeah, at 8 o'clock last night, there was a sudden spike to 21:05.00. It then pulls back, and it makes a trough A, trough B, trough C, trough D, goes sideways in an A, B, C. It even makes a D. I didn't put that in because I wasn't midnight last night. No, I wasn't. I was sleeping, yes. No, I wasn't, but I wasn't at the computer. And look at this. Then it suddenly spikes. It goes to an A minus, then an A minus again, and then it pulls back, and it goes to an A, B, an alternate Chapman wave phantom peak C, and it goes to a D and gives a turnaround. That turnaround is at 8 o'clock this morning, and it's still holding pretty darn well. And then suddenly the news comes out that there are 38,000, was it 38,000, the jobless, I mean, this was a really bad number. And the market just plunges. And what does it do? It plunges down in two moves, goes trough A, a bounce to an A minus because it takes it out on the downside move in a lowercase h pattern, and spirals down. This is exactly a 1-to-1. Look at this. 1. In fact, it's a Chapman wave parallel extension. Let me show you why. This is an exact angle and time frame. Oh, it just made it by 1 bar. It's late, and by maybe 75 cents. Yeah, no, 50 cents. It goes down to 2082, and now it's having a rebound. This rebound is trying to find legs. And I'm going to discuss this now. Now we can go back to the charts, because all I'm going to say to you is, if it takes out the E-mini, takes out 20, if it goes above 2092.50, somewhere around here, because that gray area is strong resistance. If it takes it out and it can go above that candle, 2092.50, preferably 2093, between 11:30 and 12:30. that'll be very good action. And we could see a nice give back of a chunk of the losses that we've had by the end of the day. I have to say that there are a couple of things going on that we need to talk about, but I'm just going to say that that would be upside positive. 9-period moving average is at 2091.75. Trading above that for 2 or 3 bars is also another big positive. However, if you take out this candle right here, the candle of 10 to 11, 2086.50, there's a real good chance you're going to test the lows of the day. This is a very important move for a number of reasons. So let's go through it in my overview. The areas that are working, and for subscribers in my webinar last night, folks, you can still get the webinar. There are a lot of people that weren't able to make it last night. They're going to be looking at the webinar. It should be on my, I haven't had word yet, but I believe it should be on your page by at least this afternoon. I hope so. I'll double check on that. But it's usually, they are fabulous at TFNN, getting it all together. And I suspect that it will be done. And if it is done, you'll be able to review it overnight. But there's a lot of information, a lot of stuff that you can just toss off or you can chew on. I wanted to throw out as much as I could. Why? Because this is such an important period. It has to do with the elections. It has to do with promises. It has to do with interpretations. It has to do with all the areas that are pertinent to having a market rally to all-time highs or an all-time failure, meaning we go down below the 17,200 in June. That'll be very important to support. Most significant about this is that the weekly charts are still outstanding. They are really looking good. So I'm going to run these through. E-mini down 15. That's a lot of points. By now it should be down 9, minus 9, minus 8 if there's going to be a good rebound. So this makes it suspicious that this is going to be legs C, a peak C. You remember we had a Chapman wave squash that very often says if the torque is in the stochastic, the MACD's going to have to play catch up. And that implies that the 2074 level is really sacrosanct. Take that out on the E-mini and you're looking at something that's going to be a lot more difficult to control. But the weekly has gone to a leg B. It is a gray B because it's underneath the all-time high of this contract, that is, in the 2111 area. So we're at 2088 right now, but we did go to 2106, and that 2106 round number high with an open of 2100. That makes me a little nervous. That says be a little careful here, but it's still very good action. And the MACD and stochastic are good. 120-minute chart went to a C minus, but it did take out at 2082.75. It did take out the left side low, so that is a peak C minus failure pattern. Let me move this 120-minute chart away. End of the month, end of the week. We've had the end of the month, end of the week, and there's a lot to discuss. Here we go. The Dow, INDU. The Dow is at this particular point at 17,744. We were long, and we took a little profit, and we added a short this morning on the decline. Just got taken out, and now it's kind of back to where it's not bad action. So the day is young. The daily chart so far has held all the support levels it needs to hold. Oh, music already. Let me just say, the Dow's down 95 at 17,742. The S&P is down 14 at 2,090. The comp index is down 12 at 29. Comp index is down 48 at 49.22. Gold is up $30, and we'll talk about that. And bonds are up huge, over a point. I'll be back. We'll talk about this. We'll talk about what the market can do next week.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So a couple of questions always come up in the den during the breaks, and I've already moved on like 5 steps away from what I was talking about before the break, so to even remember what it was is important. I'll go through the numbers, but what's really important at this particular stage is this. In the platinum, I was asked about platinum. This particular candle right here, this kind of engulfing candle, very often, let me just put the troughs in. It went to a peak F in platinum on the continuous contract. The troughs are working their way down. This is an A, B, C, and a D. 2 sell modes going to 2 trough Ds. This is not a trough D. This is a leg D. If on Monday, platinum, the continuous contract, doesn't go below 956.20, the low of today, but instead has an inside day, but preferably what you really want to see was to see the 988 level, which is the 200-period moving average, is trading at 984.50, up 24.40 right now. You want to see that touched. That's also the 9-period exponential moving average. You want to see a close above that. If there is a close above that, the weekly suddenly becomes active and 1006 becomes a target on the upside. If there's an inside bar and it fails, it takes out the low of the day. That's not good because 949 would be the target. So the question is, what was the exact question? The question was, if I can just get back to it, Basil, can you please talk about platinum? Platinum, thanks. Okay. So this is what I'm looking at here. The stochastic is flat at 8%, but it is turning up. The on-balance volume has not gone down as far as the left side low back in April, where you started a move up, which was an alternate count and went to a peak F top. Now what's really important, and you've had a perfect plumb line, successful test of the plumb line by not even breaking close to it. The low would be 938.10. So this is what I'm looking at. This is Technical Friday, so I wanted to grab this as quickly as I could. There's a spiral up that's gone to it looks like a peak D in the 120-minute chart if there is no new recovery high in this bar. What I want to see is this. Now, the question is what you would do if you're buying platinum and using the futures. Well, I don't know what you would do if you were using platinum. Is there an ETN or something that you could use just to give me a clue as to what I could be looking at myself if I wanted to look at it? I'd appreciate the Zuga. Now, what's really important is this particular candle that we're looking at right now is, in fact, a leg down without a trough. The higher that the right side bar that makes the trough, if it's on Monday, which should be much higher unless it just collapses completely, dollar spirals higher and gold pulls back because of something over the weekend that's said. But at 956.19, it doesn't move in 20-cent increments. No, it doesn't. So at 96.19, if there's a pullback underneath the low of today, that's really bad action. I like it. You're already in the futures. Well, then I'm going to say to you, congratulations. I think that you're in the right area right now. What's really important about this is that you want follow through. And I'm going to say by Tuesday, not Monday, but by Tuesday, it should not have tested or it should not have broken below 980 without snapping back. Preferably it hasn't even gone close to 980. But what's even more important is you want to be up in the 988 to 992 area. PPLT. I had forgotten completely about that. I remembered that someone had mentioned it about a month ago, and I said, follow it up, and I don't think I did any notes. Yeah, okay. Oh, I have. This is in leg peak C in the weekly chart, and the daily is in, has made a peak D, and now it's gone to A, B, C, made another D. I love this. I'm going to make a note of this. PPLT. So PPLT. Got it. Okay, I like it. I'm going to suggest that everything I just discussed is active. I would only say to you that I'd be a little nervous if gold by the end of the day actually pulls back sharply. By Sunday night, it pulls back even sharper, and on Monday, gold gaps down. That would say to me it's a single leg A phenomenon and that other things are going to occur. But together with that, I'm going to suggest that you look at the DXY. The DXY is the dollar. It plunged down to the 94 level, holding okay. Weekly chart took a big hit. If by Wednesday of next week, the dollar is trading anywhere close to 95.80 to 95.30, then I will be correct in saying I still think that gold has made an internal low and now needs the residual low. It could be higher or lower, but it needs another impact that tests the recent low of yesterday or even this morning. But at the same time, I think a chunk of the work has been done in the consolidation, and the gold stocks themselves should be participating very well. And that's saying to me that gold, as I said last night in my webinar, gold is active. We didn't actually get into any gold trades. Well, think about it over the weekend. I don't think there's actually a rush. I think there's big move. There'll be some kind of a give back. The dollar could bounce a little bit, but if it bounces over $1 and a quarter, that's going to be really good action next week. I'm not sure it can. I think it's the weekly chart says that maybe this move's done as the MACD deflects lower. So we are. I don't know if we're still long. No, I think we're out. I'm not sure. Let me just. So I'm talking apples to apples. We're out. We're out with a profit in our dollar contract. So that's good. Okay, so PPLT. Now, there was a question I didn't finish in Larry's time because I had a caller. I want to mention that call because it was quite significant. Silver has had a very strong spike to the upside. The weekly chart says, silver's got a lot of work to do. The monthly chart's improving a lot. Real mixed picture, because when you get a very sharp pullback in the daily, and believe me, going from the 18 area down to the mid 15s, 3 points, hey, that's a pretty deep correction. So what's really important about this is that as I'm looking at it, silver got repelled at the 200-period exponential moving average, peak A, B, C, D, E at peak E. I'm not going to put in a down arrow. I'm just going to say I'm putting this in here, A, B, C, D, E, putting a plus sign, with a good chance that it needs a little more time to consolidate at 16.355, 16.270s. That's going to be really important support. A close under 16.270 would suggest to me that there's a single leg up, a single leg A to the upside. Be careful, because if it pulls back under 16, under 16.10, that just says it's all over. Silver has to retrace and continue its consolidation, and gold, the GC contract, giving back a little bit. It's still a fabulous candle. Hasn't really, the stochastic's turned up. It hasn't gone to 20%, and the MACD has turned up. So what happens between Sunday night and Monday is going to be absolutely imperative. In the meantime, for those stocks that you've missed in the gold contract, some of them have made spectacular 200, even 300% gains, and they've given back a lot. Some haven't. Let me just look at a GG, for instance. Yeah, look at that big gap up $1.18, up almost 7%. ABCD, it made a gold core, it made an A, B, C, D. It made a peak D at the top in the weekly chart. It pulled back pretty sharply from 20 to 16. I say 4 points in a $20 stock. That's what, 20%? 25, yeah, 20%. That's a big move. So a nice bounce. I think they're going to have to give back some of it, but it's a good start to another move in gold. I'll be back. Basil Chapman, Tiger Technicians Hour, and I'm not sure what I forgot. Oh, bonds. I'll talk about bonds when I get back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, I was looking at gold core GG trading at 18.13, up $1.18. So far, this just looks like a bounce, and it's going to have to do a little bit of work to build some kind of a base. The stochastic and MACD are good. Made a peak F top in the recent high in the daily and a peak D in the weekly, and that suggests to me that if gold actually takes off from here, and I need to now go across different sectors. If gold is going to start a move that is really sharp, it's going to be a fear move about something that's going on in the economy as the dollar goes lower and lower. And it should not. For instance, gold core I'm looking at right now, the high today so far is 1829. But it closed yesterday at 1695. This is a huge move, one of the biggest gaps I think it's ever had. Now, what's really important, gaps down it's had before, but gaps up, not like this. And now what's really important about this, it can't just be floating in there. Look, if I circle it like this, it looks like some kind of what you'd see at MoMA, the Museum of Modern Art. So that candle needs to find some kind of support. It needs to build a base of support. It can even break into the gap a little bit. But I can just tell you this, if gold core at any point in the next week, I'm giving it a full week, Monday through Friday of next week, if it closes under $7.50, it's trading at 18.14 right now. It will say to me that that weekly chart is just really going to go into a rectangle formation, bounce up, bounce down, bounce, just keep bouncing away. And the surprise might be that now gold is actually going to be a little bit better, and that the gold companies still need to digest this huge gains. I mean, let's face it, a stock that goes from, after tanking, going in a much quicker pace from 946, the low of the week of the 22nd of January, to a high of 20.24, that is huge. So and it's done it in the quickest amount of time. It came down in a much longer time frame. So I'm thinking that that's what it needs. Now, that's not to say that if you've got your gold stocks that you should get out of them or anything like this. I think that if you survived your gold portfolio up until now, most of the worst has been done. At least this is the way I'm looking at it right now. So if you were in gold core and you sat through that dip to 16, you'll be prepared to maybe sit through another dip to maybe 1723, but not under that, because that would be the 9-period moving average, would be very negative if it takes it out. So, okay, now there are a couple of things again. What about the stock market? And what about bonds? What about the TLT? The TLT spiked to a leg E in the daily. It hasn't got to a leg D above 135.25, but this is a spectacular weekly candle that I'm looking at. And the monthly chart is still continuing to improve. In Larry's hour that I did at 9 o'clock, I'll do this just real quickly to show you that the 30-year T-bond yield is just stuck in a range, and that it is TYX.X. Look at this. This is a 30-year down channel, and it's still in the middle of the down channel. So nothing there, nothing to see here, folks. Just move along. So I wanted to do that. Then the other thing I wanted to talk about is within the context of TRCCI, this is a spike to a leg G/B. Maybe I should just be very, as always, a little cautious about this. G/B in the Thomson Reuters Continuous Commodity Index, and it has just a mix of all the different equal weight. It's really an equal weight commodity index. Spectacular move to leg E in the weekly chart. Very strong leg A, but in the context of where it's been, it's the most pathetic thing you could ever see. This little tiny rally in the commodities. So something's going on in the commodities thus far that's been very positive in the shorter term. Certainly in the daily and weekly charts is spectacular. Well, look at this. If you go to the soy, if you go to the soy, type it onto that little rectangle there, the S. Soy is in leg. I'm going to have to do the same thing here. Actually, I can't. I've got this as a C. Everything about it looks like it's a kind of a G. That's really the G. But we'll deal with what it is. It's down 5 now after having a spectacular morning, going all the way to 1169 in the daily. The weekly's in leg B and leg D, and the monthly chart is in leg B to the upside. I would suggest to you that we're real close for soy and wheat to be pulling back. The daily in wheat is in leg A, B, C, D. This is leg D. The previous peak C failed. It's very unusual to do that, but this I'm going to put here as A. No, A. It's even further along. B, C. I better check. My eye's usually good at this. 484 and 3/4, 484 and 3/4. All right, C1, C2. I have to then call this a D for now. So the technicals are still very good in both soy and wheat, but in the meantime, back at the ranch, it's starting to get a little bit toppy looking, but it's a spectacular move. I mean, this is like the previous move in April. So sharp. Boy, this thing, when it wants to move up, it can. And natural gas right now, I would consider this is either an E or a brand new leg A, and I know it's a brand new leg A. I can't call it an E because the last D. Wait, that's an A. Restart. I guess I can. All right, so let's look at it this way. A, B, C, D. A, B, C, D, but it could be D, E, F, G. Okay, this is what I'm saying. That natural gas is at another very big spike this week. Within the context of natural gas, the monthly chart is just horrendous. The weekly chart has improved. It hasn't made leg D yet. I like the action in natural gas. I like the technicals, but the single leg up says that at 2.41, up 0.005, if natural gas starts to break 2.35 by Tuesday of next week, that's not a good sign. But if it holds here and it takes out the left side high of the 25th of April at 2.466, I'm looking at the continuous contract, that's very positive and starts leg D in the weekly chart. Okay, I've covered a bunch of things here. Now I want to do something about the market itself. The XLF financials obviously got a bad hit this morning because of the news. We were long and we took a small profit. No, it was a small profit, yeah. And we had a little bit of a loss. So the two, now the profit is bigger than the loss. So that's good. But the financials is making a potential peak E here, but a leg C in the weekly. It's really important. I do not want to see the financials break under 23, because if it does that, it's going to suggest that the weekly chart needs even more time to consolidate. And that monthly chart, though, is still pretty darn good. So I'm not giving up on the financials just yet, but short term, not looking too good. I want to do my Dow Quartet, GE. Holding okay, it's down 6 cents at 29.99, and it was suggesting by the action of the last 2 days that this market went up, but there was going to be a pullback. It was 100% correct. I keep getting asked, why don't I put GE in my newsletter as a buy, since I use it all the time as an indicator? I guess the reason is, as an indicator, I'm not biased one bit. I just treat it as what it is. And if I was, say, long this, I'd be looking at it on the long side instead of saying, be flexible. It could pull back. Right now, it's looking just okay. It's holding okay. It isn't great. IBM had a fabulous move, a bit of a pullback here, peak A, B, C in a new rally mode. I like it. I think the weekly is looking good. I have to tell you, I'm not afraid of this market at all at this particular point. Triple M just holding steady, nothing great, but it isn't breaking down. And UTX, my second pilot light, is holding okay, doesn't look great. And this is saying to me, we might need a few days of consolidation here, but I'm liking this action. I'll be back in a moment, folks. Basil Chapman, Tiger Technicians out. Dow's down 72.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So I was asked about gold, GOLD. Yeah, it's the same sort of thing. Gold itself, GOLD, Rand Gold Resources, the chart is actually a little bit better. It's made a peak E in the weekly chart. I still think that it needs a little time. A good bounce. If you're in it, I'd say, hey, great. But if you haven't got in it, all I'm going to say is the same as I said earlier on to the question of should I get into, can't remember what it was, the very first thing we looked at. And I said starter position, but it has to be a starter position. I do the same thing here at gold. I'd say, it's going to hold well. Be prepared that it could drop 2.5 points in this consolidation phase or even a little bit more. But if you want to just nibble here and start a position, that's fine. I do think it needs a little more time. And I have to tell you, I've done a ton of homework. We did the webinar last night, went through things in great detail, the different markets, the different attitudes, what's going on, the socioeconomic aspect, the works. And I must tell you that everything I look at is still bullish. And that's the way it is. And let me go to this here to show you the VIX index. I wonder what it's doing right now. Yeah, it's pulled back. It's at 13.83. It's only up 20 cents. And the market, S&P is down 9. I like this action, I must say. A couple of questions I had. Mark wanted to know, he's confused about my TRIN index, the Chapman Wave TRIN index. Remember, that is actually Richard Arm's TRIN index, but I use it in a very different way. I don't think he's ever used it in the way that I use it. I shouldn't say that. I just have no idea. I know that he had never before. So when it's very high, let me just go to this right now. It gives me indications. It was at 2.16 on Wednesday and said that Thursday there should be market weakness before strength in the Dow, and there was. And if it's very low, it says that with I see what the question was. I used it incorrectly, but I actually got it right. You're absolutely right, Mark. Every once in a while, I just twist the two, and I was actually lucky to make it work out that way. You're absolutely right. When it's high, I even sent back a note to him to say what it was. When it's high, it means that within 2 days, there should be an E-mini rally of at least 9 to 11 points. It often happens overnight. So that if you're thinking of shorting, you might have a better opportunity just having patience to wait for a sharp move down to rebound strongly, because that could be the move to short. Because if you short it too early, you're going to be looking at 9 to 11 points on the upside of being wrong. So it's a fantastic heads up in that way. But when it's low, And you were absolutely right. Just once, I think this is the second time I've done that in maybe 3 years. I just did it in my mind. And the other one was because it hadn't happened for so long that I almost forgot about it. So yes, thank you, Mark. You're absolutely right. So when it's very low, and I don't give out the numbers, they're my numbers. When it's very low, I'll tell subscribers it's very low, and you've got to expect that the very next day there will be weakness in the Dow, a rug pull, and then a rally. We got that yesterday. We got it because of the E-mini technique that I use in the Chapman Wave trend gauge. Whoa, thank you for reminding me. You're absolutely correct. Whoa, that was not good. Now look at the candle that's forming in the Dow. It's only down 47. And look at this. This is a huge difference in the market. You see this candle, instead of breaking under the 20-period moving average and closing under as it had done on those previous moves, this is fantastic action right now. I like it. The day is young. We're not even to 2.25 hours into the day. But if it can hold, if the Dow can close anywhere from a minus 65 to up 25, I have to tell you, that's a really good action. And there are other areas that we, in my newsletter, and let me just tell folks, if you're a subscriber, number out of the 22 I have on today, number 6, I did an update. I sent it at about 9, before I did an Irish show, by 9 o'clock. I sent an update to say, I mistyped, I don't know how I did it, but number 6, the last letter is not an A, it should be a C. Remember, I showed the chart, I discussed it last night. That's the one I wanted to talk about. We didn't get it. It's still there. It's still active. But if you're following closely, the numbers are absolutely correct. But I put the symbol incorrectly. The last letter is an A of that symbol. Is a C, not an A. So here we are. Dow's down 55. S&P's down 10. So the S&P, the Dow 30 is a little more stronger than the S&P. So, but at this point, I love this candle. I hope it closes somewhere there and that Monday is an up day, because this changes the scenario. Otherwise, we've got this. I don't want this. I don't want the 3 candles down, just huge candles to the downside, and a little modest little thing here that goes up and then plummets down and breaks the support, as you saw on January the 6th. So this is really important action. I like it. Okay. Now let's get out of this and let's talk about the other things that are very important. Question about the EEM, and that's also an email question. So let me get to the EEM. The EEM is up 34 cents at 33.71. I mentioned the other day that it was improving. It wasn't my favorite. It wasn't a great chart. I like it. I like the fact that today, instead of being down 33 cents to 33.11, testing the 9-period moving average, is actually making leg B. So now I'm going to say the EEM is in play. It isn't a great chart in the weekly, but running today, Dano, makes it important. And of course, this always has gaps. I'm not going to use the gaps as a technical tool at all. So it's gone to trough D, and now it's in leg B. I like it. I would not get too carried away. You can start a position here. If it pulls back at all and holds 33.50 in the next two sessions, Monday and Tuesday, and then goes to 33, it's at 33.70, goes to 33.94, that's confirmation that you're correct. You can start then saying, on the next pullback, maybe I'll want to add a little bit more. Hope that helps you on the EEM. That's the iShares. I think it's the iShares. Yep, the iShares Emerging Market ETF. That's interesting that the emerging market is doing well. Oh, maybe they just didn't hear the news. Nah. Well, with the time delay, maybe that's a point. That is a point, you know. Nah. Long-term short on EEM. Someone said in the den. Yes, the long-term doesn't look so great. The weekly chart is going to have a lot of trouble in the 34s. But as a trade, I think that was the question for Dana. Can I look? I'm looking at EEM and I'm saying, yeah, I think it's in play to move to the upside, but it's going to have a lot of resistance in the 34.30 to 34.60 area. If it takes that out, that means it's going to retest the D. That's a nice move percentage-wise, 2 points in a stock like this. Another question I got was, let me get to it. Okay, so now this is the big thing. With interest rates so low, Is it going to help the automobiles? Well, Ford is down 24 cents at 12.97, and General Motors is down 73 cents at 29.54, down 73 cents, minus 2.4%. I must tell you that this is the most mixed market, and that's the reason why I'm really enjoying the Dow chart. It is almost independent. It has, look at this, it has AXP, and they could kick out AXP, American Express, because it's really not doing very much. There goes that beep again. Of course, the only time I ever remember it is when it beeps, and then I put it off, and then I forget about it until the next day when it beeps. So American Express is holding okay, but Visa's the one, because I think Visa represents more of the economy than, say, an American Express, the way it's calculated. So I'll be back to talk about this in a moment. Dow's only 49 points down, and the S&P is down 9. Hey, nice. Congratulations, Dow. Nice comeback. I'll be coming back straight after this break.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi folks, we're back. So I just wanted to answer someone in the general asked me, Basil, will you consider QQQ 10 minutes a regular B or is it a gray B? Still, since it's still under the opening high. I would A, B, C, D, E, and made a peak F top and pulled back in a single leg A. Single leg A's can be very positive sometimes, depends on what happens. What I'm saying to you is if the QQQ trading at 109.99 down 59 cents can pull back and within another 2 to 3 bars, make a leg C, or it doesn't have to be a C. I'd even say if it goes above this candle, 110.12, if it goes above 110.12, I would call that a regular peak A to a peak B or C, whatever that is. expecting that it should go to a D. It has to do with the patterns, but basically I still consider it a retracement because it's under the major high. So even if it goes to a D, it's not a big deal. It's just a retracement, just means it's under a major Grand Canyon cliff, and it's just having a rally phase. And that rally phase can go to a buy mode. It's not a buy mode yet, still a buy signal. I would consider it a buy mode if it goes maybe 10 cents higher, above the last high. Okay, question there. And then the question I had, I think I was talking about it, Oracle, I was talking about American Express. Well, there's nothing to discuss here. The American Express, I think that Visa's a better chart pattern. That's really all I wanted to say, and that they could get rid of American Express. Oracle, the question is the weekly chart. Yes, I can see what you're looking at in the Dan. The weekly chart has one of my favorite patterns. It is the down channel, exact parallel down, narrow down channel going to lower highs and lower lows, but all within the same parameter. So in other words, the candles all have pretty much the same distance, except the last one went from the top to the bottom. So that says that if there is a break in Oracle, it has to be to the upside, not the downside. It's trading at 39.61, up 37 cents. Good action for today. If Oracle's able to go into the 40.60 area, it's not a big deal, maybe 60, 70 cents higher. That's really positive and says, hey, now you can start tackling the left side highs of 41.49 and peak B at 42 round number high. But if it starts to break down, watch out, because if it gets into the middle of this Roman candle right now, on the weekly basis, if it gets to 38.60, that's trouble. It'll just continue this pattern, maybe even break the lower side. Okay, so that's that. ZOES is another stock. Yeah, nice action coming off the bottom. This is a tricky one. It's almost the same pattern as Oracle, but not quite as thorough in its up and down action in the weekly. I'm not sure about this. This is a lot of action to get 37.40 to go much higher. So this is what I want you to do. We're about to wrap up. I do want to say, stay tuned here with fabulous programming coming up all day. But most importantly, if you're still interested in the webinar I gave, which is really a longer term, it's a bigger outlook. This is the guts of what I like to do. Go to the front page of TFNN, sign up for the webinar. You'll get my newsletter for a month free. This is a perfect time. I mean, trades all over the show, long side, short side, all over the show. So this is a great time to be doing it. And also just to get the kind of information that I love to put it together in a webinar rather than just to talk about it here, because I can't always follow through and someone will call and lose track. That was totally focused. I got everything done I wanted to get done. I even talked about the 1%ers. So with that, I'm about to wrap up, and I'm saying to you, have a wonderful weekend. And I do like the action in the Dow right now. I think this is very, very nice action. I'm still positive on the Dow. That's all I can say. A little consolidation going on. And with that, I'm going to wrap it up. And I'm also going to say I'll be back Monday, and have a wonderful weekend. And I don't even hear the music. My engineer must be wondering, what is happening here? He's beating the bell. How can he beat the bell? That's because I am wrapping up for the week. I got a lot to do to prepare for my subscribers for tomorrow. I like to send out charts already early Saturday morning. Hope to do that. Have a wonderful weekend, everyone. And speak to you on Monday.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.